Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, co founders, entrepreneurs, authors, entertainers, musicians, you name it, around the world in crypto and blockchain. And today I have an amazing guest. His name is Benjamin Gabay. He is the co founder of CrunchDAO. Benjamin, welcome.
Well, thank you very much, Jamil, for welcoming me in this podcast. I'm very glad and thrilled to be here with you today. Thank you.
Awesome to have you. And so let's start off with asking you about your background. What is your background, and is it a logical background for what you're doing now?
Well, I think there is nothing very logic when you are working on crypto, but my background is actually I studied law at the beginning. Everything starts from law, and I did a double degree in France and Germany, so I do French and German law, and then I studied politics and from countries to countries because I was in Germany. Then I went to Germany, to France and Germany, and then I went to Switzerland, then in Iraq, and then I came back to France where I founded my company, which was a marketing company, an agency, doing some growth hacking. So basically, it was in 2016, and we were I would say, the first biggest growth hacking, growth marketing agency in France. And this is a company that I sold last year before joining and creating CrunchDAO. So yeah, and this is what I've been doing. And I would say that for me, the move was quite logic because um, it's when you do marketing, I think that the most difficult thing that you can do is a crypto thing. When you are doing specifically a DAO, like is CrunchDAO, you need to be a central bank director because you need the perfect tokenomics, and you need to be a constitutionalist because you need to write the the, the contribution, the duties and rights of all your members, and also you need to find the best products. So it's a mix of everything I learned during all these years, and yeah. So for me, it's the next step because it's something that is really hard, but that pleases me so much. I enjoy every day what I'm doing, and I think it was logic. And also, of course, yes, it's trendy. But before being trendy, I would say that uh, this is something that is very hard, and what's that triggers me. It motivates me every day, every morning.
Um, I might have heard you. I might have heard you wrong. You're going back and forth between France and Switzerland and Germany, and then you said, I think I heard you say Iraq.
Yeah, because I was working for a commodities company, and we were doing cement, and I was in marketing. I was doing like some analysis on the market, and I stayed there 3 years. It was actually in northern Iraq in Kurdistan, and we had like it's an amazing country. I would say that the people are really nice, and where I was staying, very welcoming. And I learned so much about marketing and branding for also a very difficult, uh, a very difficult field, which is cement. Like when you need to brand cement, it's not something that is so easy. So this is something that I've done, and yeah, I take a lot on this experience because yeah, it was a great time.
Awesome. I got to go back to after graduate school. I um I got a job with Ingersoll Rand, which at the time was a global manufacturing company, and I met three blokes from Ireland, and they did a study and a presentation on 300 things that you can do with a brick. So I understand this is a very challenging field. So let me ask you this. Let's talk about CrunchDAO. What is it all about, and what makes it great?
Well, at CrunchDAO, we are predicting the stock market. So basically CrunchDAO. It's a research team of data scientists leveraging the power of collective intelligence and Web3 to produce and sell next financial insights. So basically, we are a research team of 2,000 data scientists and 400 PhDs, and we are working together. And we are trying to, and it's not just trying actually, we are actually predicting what will happen in the stock market. So what's very interesting about this project is that we are combining for the first time decentralized finance with decentralized science and traditional finance. So it's a mix of the three things that makes it very, very powerful.
Okay, so the stock, when you talk about the stock markets, you're talking about the New York Stock Exchange, the S&P, NASDAQ, or you talk about European stocks? So I just want to get an idea.
Yeah, basically we are ranking the first 1,000 first American equities. And we are doing it in the, what we do basically is that we build a market neutral signal. So what does that mean? It means that whatever the market direction, whether it goes up or it goes down, then we need to generate yields. We need to make 10% at least. We aim market neutral. So for those that don't understand what means market neutral and how do we achieve this, it means that so basically what we do is that we rank American equities by performance. We take 1,000 stock that we rank, and we are long on the first quintile, so we buy the first quintile, and we are short on the last quintile. So it means that we short the last quintile, so that whatever the market direction, we need to generate yields with a very low volatility. And that's the beauty of a market neutral signal. That's what we are doing. That's the most simple explanation, I would say. Now, if we want to be a bit more technical, on top of this being long on the first quintile and being short on the last quintile, what we do is that we are working with 20 factors and 50 industries, and we need to be hedged on each factor, which means that on each factor, like for example, if on the tech industry, we need to be 50% long and 50% short. On the if we take the factor momentum, for example, we need to be 50% long and 50% short. So it's something that is very technical, and this is why we need a community to help us on that, because it's heavy mathematics. And yeah, that's the beauty of these products, and that makes this product unique. Market neutral signal is maybe the most difficult things to do in finance, and this is what we are doing now.
That's good. And that's so let's get into my next question, because I mean I could get into I want to balance asking you about the real technical details so people will get lost versus high level so that people will stay engaged. And I do want to know the technicals. Got a master's degree in finance, so I would love to know the technicals. But I want to talk about your DAO because it's unique, right? Most DAOs focus on crypto only. You're the first one that I heard about in the world that looks at the stock market. So, CrunchDAO is unique in that manner. What makes your strategy market neutral and unique, and why did you pick the stock market?
Well, Jamil, just I think this, like, how does your meta model work and how do you leverage it's the fourth question, isn't it?
It is, but a lot of people pick DAOs and they pick going to crypto. You pick DAO and went into equity. No one does that. You did that. Why?
sorry, yes. So why are we picking the equity and not the crypto? That's the question.
Pretty much.
Okay. Yeah. So that's so why did we pick equity and not crypto? That's the question. So first, we are not close to crypto. You know, we are also digging on this subject. That equity is a research field that exists since decades, and there are a lot of research. So it's way more easy to start with. That's the first explanation, even if it's already very difficult. But there is also another explanation that's a technical one, I would say, is that today it's very difficult or even impossible to be market neutral on the crypto um, on the crypto world. You know, it's very difficult because first there are very few assets to short, and we need to short to have this market neutral signal. Then the volatility is very high. It's way higher than the in the equity world, and it's why there are, I don't know anyone doing a market neutral signal on crypto. I know maybe there are some, but I don't see people succeeding today. I would say it's almost impossible, but it will be in the next years for sure, with the volume coming on the market again. That's why we choose and picked equities.
Okay. So again, so now I'm going to have to ask you about the technicalities of your market neutral strategy. How does it work?
Yes.
You,
So, sorry, Emil.
no problem. I was going to ask you to dive deeper to give me a technical, because I want to compare it to crypto, and I need to know how your technical works in order to compare it to crypto, because I think you can short crypto, because I've seen it. So just really interested to see how it works.
Well, I think if we want to be a bit more technical, then I think that I can forward these kind of questions to the technical lead. But the market neutral signal is quite easy to understand. The game of it is to be short and long at the same time. So you need to be long on what we do. We do it on the first quantile, and we are short on the last quantile. And it means that if the market moves up, then the long leg, we say, will perform well. And if the market goes down, then it's the short leg that will perform better. That's what the people, I think, need to remember about that. And then on top of this, we need to be hedged on many different factors. We are working with 20 different factors, 50 industries, and each factor and each industry needs each to be hedged. You know, so for example, the tech industry is every industry is hedged at 50% top, 50% is long, and 50% is short. So it's a big mix in the end, and this is why it's very technical. And on the crypto specifically, it's not possible to do this, because if you are short in crypto, then you need crypto assets to short, and there are not so many crypto assets to short today. Maybe you can think you didn't notice, because and many people don't notice that, but there are not so many assets to short, and also there is not a lot of volume. It's not, I mean, you can't compare the crypto industry with the equity market. It's like equity market is way more bigger. So this is why we are doing this on equity and not on crypto.
Yeah, I agree. The equities are a much larger market. I agree with you.
Yeah.
But I did see, and I won't get into this too much, a little bit. I did see FTX short other platform tokens and cause bank runs. I did see that. But there, like you said, it's a few, right? So I'm gonna move into the next question, because I find this one compelling. What you're doing is this: is you rely on a collective intelligence, right? So how does your meta model work, and how do you leverage the power of collective intelligence?
That's a very, very good question, and I would like to do an analogy on this so that everyone can understand the power of the wisdom of the crowd. There is, I think, at the beginning of in 1907 exactly, there is someone called Francis Galton, and this guy asked 800 villagers to guess the weight of an ox. And what he wanted to prove is that the crowd was stupid. And when he received all these guests, he checked one by one, and no one guessed the weight of the ox. But then he checked all the answers, and then he did the mean of all these answers. And what he discovered is that the crowd actually predicted or guessed the weight of the ox very well. He had just 2 kilograms of difference between the actual weight and the guessed weight by the crowd. So that's something that is working. I can take another example. For example, a chess player, a very famous chess player called Garry Kasparov. I guess that many of you heard about Garry Kasparov, and it's a chess player. He's worldwide one of the best chess players in the world. And he played against 50,000 people. This party, the game, was like it was on for months. I think it was every day. It was a different term. So one time him, one time these 50,000 people, and every day these 50,000 people were discussing on the chat the best move. And actually, they did not beat Garry Kasparov, but they almost did it. They almost did it. And Garry Kasparov said a few years later that he actually was reading what the people were saying on the chat, so he spied on the people. And they reproduced this experience these last years, actually, in France, and they took the best chess player against, again, tens of thousands of people. And actually, the crowd was winning more than 6 or 7 times out of 10. And this is exactly what we are doing. We are reproducing this mechanism. Because how does it work? It's like, for example, someone, if I'm taking the example of an ox, it's like saying, you come and you say, well, I think that the ox is 500 kilograms because of the color of the eyes. And the other one will say, I think it's 400 because the neck is like this, and then there is another one that will come and say, well, the shape of the ox is like this, so I guess that is 600 kilograms, because everyone brings his own methodology. And this is exactly what we are doing with collective intelligence and collective, I would say, machine learning, this machine learning tournament. Everyone comes with its own methodology. Everyone comes with its own method. And by averaging, we call it ensembling all these methods, then we have the best prediction that we can have. And that's what we do.
Got it. Awesome. So, I guess you're familiar with, ChatGPT, right? Everybody is.
Yeah.
I think. And there are some biases built in to the artificial intelligence, to the community power. So, what are the societal benefits and detriments too of leveraging the collective power?
The social benefits are huge. Imagine that you can do this in a hospital, in an ICU, and you can predict or detect when a body or when someone will die, or when a heart attack will happen. Imagine that you can detect brain cancer, or that you can detect, there is something that is very common with the stock market is very noisy, and for example, you never know when there will be a crash, and this is exactly the same thing with your body. Maybe just the temperature of your body went 1 degree too much or 0.1 degree too much, and then it trigger a systemic response from your body, and sometimes it does, sometimes it doesn't, but it can also depend on hundreds of different factors, So what we say is that there are a lot of noise, and it's very difficult to see when something will trigger something else. For example, let's say it's the same with an avalanche. An avalanche. Sometimes the temperature is going a bit high, but nothing happens. But then, just because the pressure is a bit different, then an avalanche is triggered. It's a mechanism that is very, very, very complex to understand. And this mechanism, this avalanche mechanism, is the same in the stock market. It's the same in the scent. It's the same in your body. It's always tiny different things that makes the difference and that will trigger a response. And if we are, it's the same with the weather also. And if we are able to predict or to understand what will happen, because we have thousands of people predicting the weather together, or predicting or improving models together, then I think that the society will benefit a lot of it, and I hope that maybe one day we will be able to do this. We are starting with finance, but why not in some years doing another thing like healthcare or weather prediction, or also space weather prediction. We have our lead quant is specialized in space weather. So this is something that we could do, and this is something that we have in mind.
And the detriments?
The detriments, I don't see so many. I see people creating value together, and I think that I don't see detriments. I think that it's just communities that can act for the good. Today, for us, it's the market, but once the technology is ready and it's working already, then it will be very profitable for many other verticals, in many other industries. And I wish there are a lot of people that do the same on many different industries.
I like your way of thinking. You mentioned the heart attack thing. I've had 4. I would love to know when number 5's coming.
Yeah, my father as well. Yeah.
I'm still here though. But what so but I do agree with you that we should, instead of being left in the lurch and not knowing when something's going to happen, that it's important to challenge, the traditional models. I mean, I know your company challenges traditional training models, but what can we do to really challenge the traditional models that exist today? And if we do, what do you see as being an improvement upon that?
Well, I think that we must have. I mean, I think I'm sorry because I will say something that might hurt a lot of here in the crypto space, but I praise for regulation, and I hope that regulation will frame everything that we do. It's very important so that there is adoption and that everyone can move in the same direction. So yeah, I'm not sure I answered well your question. Maybe you can ask it again, Jamil.
You did. You did. Regulation.
Okay.
I was going to
Yeah,
ask you
regulation, of course.
I was going to ask you what we need to do to move forward collectively and collaboratively, and it seems like every different country is doing its own different regulation, and none of them are in harmony with one another, right? So, I was going to ask you what's missing that if it was implemented now
Yeah.
in the regulation space or working together or collaboration, that would make a difference.
It's the same. That's the regulation, totally the regulation, 100% the regulation, and I think that people, I mean, when we see what happened, I think people are greedy, in the crypto industry, there is no accountability. But I think that there is a big difference in what happened from, I would say, 2015 to now, especially last year and in 2021. It's because all the people were doing project without real assets, so there is no value in the token that they are doing because there is no value in the product they are doing. For example, in the case of CrunchDAO, the value of the token comes from the research, from the performance of the research. And I think that people forgot the basics of a business. Basics of a business is to have uh, a real product, and it's to be accountable for what you do, and it's also to have regulation, and in my opinion it's also to pay tax, so this is all of this that will move the crypto industry in the right direction. We need regulation, we need the people not to be so greedy, and we need also people to be educated on the project. The retail needs to understand that yes, it's difficult to invest in crypto projects. Already when you are in a crypto project, it's very difficult to understand the technicalities of the crypto project. So in my opinion, it's very difficult as a retail to understand the true value of a project. And people are just investing because of pump and dump things, but they need to understand what lies under the project. And this needs also to be framed with a strong regulation and yeah. When I see FTX, what they did, it's something that is not possible in the equity markets. I mean, because there are regulation. If they had the same regulation, it wouldn't have happened, So that's what will make the difference, I think. No more greed. I'm not sure it will happen, but at least regulation and a better understanding from the people having a crypto project of the value they are bringing, and a better understanding of the retail of each crypto project.
So I would tend to agree with you. I tend to agree with you. I also believe that there's, because people are investing based on pump and dump. I understand that, and people don't understand the technicalities, and I understand, and a lot of them are YouTubers, and I understand that. But what I don't understand is maybe you can help me understand this. Human error exists in both crypto and stocks, right? And regulation error exists in both crypto and stocks. What changes in this businesses like that, decisions based on human error would be helped by your prediction models.
Um, well, the beauty of the quant research, and that's what we are doing, is that we are working with statistics. So human error is a statistics. So there is no we are removing a bias, um, yeah. So I don't see it being a problem for us.
Where that question stems from is we had regulation here in the U.S. in 2010, and companies used to make decisions based on positive net present value projects, right? In order to increase the value of a stock, you took on a project that had a net present value, it increased the value of the stock.
Yeah.
And in recent years, the way that people have been pumping up their stock price is by two ways: by buybacks and layoffs. And you cut the
Yes.
costs, you reduce the shares, you keep the stock price high. How do you look through the artificial increase and improvement in a company's performance versus the real improvement and performance in the company?
Well, that's because it's one factor among 20 others, and it's exactly the point of quantitative research. We are doing it with, this is things that you with your eyes you will not notice, but with our way of doing, because we are analyzing thousands of stocks, we see patterns, and this is the pattern that we are trading. We are not trading, for example, we have a quality factor. So, for example, what we can do, of course, is rank the best companies that have the best financial statement, the best balance sheet, and short the ones that have the worst balance sheet, and that's a factor. But we have also 19 other factors, technical analysis, we have, many more. And also on top of that, we have industries. So basically, we know that what we do is that we will not be exposed to an industry more than X%, So we are very careful on the way we are building on our portfolio. And sometimes, yes, there is a human error, but this human error is taken in account by our algorithm. So there is absolutely no issue with that. This is a quant work. It's not quality. When I say it's not quality, it's not a qualitative analysis. It's a quantitative research analysis that we do, and it's where it's different, and it's where the power of our solution is.
Landed for me. I got it. I got it. So you look at such a high level and such a swath of data, such
Yes,
of information. The way the quality works in the company becomes irrelevant to the complete data that's in the industries and in the market.
Yeah, it's one factor among others. Exactly.
Got it. Got it. Thank you. Thank you for helping me understand it all.
You're welcome. Yeah, it's a very technical project, and but this is the beauty of this project. It's a mix between people that are researcher, people that are doing like, it's also a big community work. It's the technical skills you need to have to understand the project. Yeah, it can be a bit difficult, but I hope that everyone understood what we do and how we do it. And yeah.
Awesome. One last question then. I want to thank you very much for your time. Thank you very much for your time today. It's been a great conversation.
Thank you very much, Jamil.
You're welcome. One last question. One last question is this. It's an easy one. This is probably the easiest one of all day. It's how can people find out more information about CrunchDAO, about what you do? How can they do that? How can they get involved? How can they do that?
Oh, well, first you can visit our website. It's CrunchDAO.com, CrunchDAO.com, and you can also follow us on Twitter with the same handle, CrunchDAO. And also, of course, hop in the Discord. We will be happy to welcome you. We are welcoming every member, and we try to we are onboarding every member one by one, and it's a big pleasure to have you with us. So if you are interested, please feel free to reach out. We'll be really pleased to see you with us.
Awesome. Thank you very much for your time today.
Thank you very much, Jamil. Thank you very much for your help.